Hey everybody, welcome back to my channel. As the year end approaches, now is the time to be getting your books and records in order. So today I have prepared a very boring list of shit you should do between now and the end of January. And for more information on how to prepare for year end, if your subsidiary is incorporated in Canada, check me out at themactax.com. And don't forget to subscribe for more tips on how you or your clients can tie up loose ends as the year winds down to avoid all the BS you're probably already experiencing. Okay, so let's discuss my tips and tidbits on what you can do for your year end now. If you're filing HST or GST here in Canada, for sakes, make sure your gross sales reported on your income statement, corporate tax return, and HST returns all equal each other. If you don't, you are just asking for trouble. And if they don't equal each other, and sometimes they won't, make sure you have the reconciliation that shows why for when, if and when CRA asks for it. And they will, because they do 100% of the time, even if the differences are small. And tip number 2, and this is a corollary to tip number 1, make sure that your HST sales are disclosed as a separate category of revenue from your other categories of revenue on your income statement and on the corporate tax return. The corporate tax returns in Canada are designed to accommodate this. This in itself may be enough to stop CRA from asking the question, why are your sales on your corporate return different than your HST sales? It's just low-hanging fruit for them to start pulling at. When the two numbers don't agree, it is a big neon sign telling CRA that you're not keeping good books and records. And CRA collects more money from poor books and records than they do from aggressive tax planning, so they look for it and they go for it. I am actually faced with this problem right now where my client did absolutely nothing wrong, but CRA is digging just for this reason. Now, my client is not in any trouble, but I assure you it is a lot of hassles. Okay, here is tip and tidbit number 3, where cross-border related party amounts appear on your balance sheet. You must do the following 3 things and do them now. Number 1, you have to prepare a continuity schedule for each related party balance. And number 2, you got to prepare the backup for the continuity schedule. And just a caveat, if you don't know what backup you require, don't waste your time. I got your back. Just give me a call by going to themactax.com and grab my number there, and we can discuss what transfer pricing documentation you require. You're going to save yourself a lot of pain and aggravation for one phone call. Now, here's the third thing you need to do, but you only need to do it if your foreign related party amounts on your balance sheet are greater than $1 million. You're required to report your related party amounts on CA form T106. And for God's sakes, make sure that these amounts tie right back into the continuity schedules that we discussed earlier on in this video. But for a little context, CRA form T106 is analogous to IRS form 5472. So don't with it. The T106 is kryptonite up here, just like Form 5472 is in the US. Think about it. The CRA computer sees this foreign related party amount for $1 million. How difficult is it for that computer to spit out a letter that says, what is this? Please send us the backup. And it will. I am dealing with this very issue right now. And again, the client is in no trouble, but they got hassles coming out their yin-yang. On a more serious and somber note, keep in mind that everything we have discussed to this point at the end of the day is just about keeping clean and current bookkeeping. Yes, after 30 years in practice, I am telling you your best defense against CRA is not fancy tax planning, it's clean and current bookkeeping. Now for tip and tidbit number 4, do not even think about sucking out your Canadian profits with a management fee from the United States, or anywhere else for that matter. Any management fee that cannot be backed up with appropriate transfer pricing documentation is subject to a non-deductible withholding tax. In fact, what CRA does is they deem the management fee to be a dividend and charge you a withholding tax of either 5 or 15%. And just to finish it off, remember that management fees are not treaty protected, so don't go looking in there for some relief. Now, here's something that happens a lot, which you should absolutely avoid. Do not let some suit in your organization tell you, bill Canada management fee, we'll worry about it later. No, wrong. Worry about it now, because if you don't, I assure you the CRA computers will. In fact, if you need to, show the suit this video. Okay, here comes tip and tidbit number 5. Now, it is very informative, but it's not over the top shit like before. So here's a few things you need to know about installments. First point, know that unlike the USA, your Canadian installments are based on prior year's taxable income, not the current year's taxable income. And another thing, installments are required by law up here, and CRA in certain circumstances will charge you installment penalties in addition to the interest that they would charge you for an installment being late. CRA collections is quite often now calling people for late installments. That's how broke we are up here. Now, this 6th point is quite dry, but it is relevant. If your year end is December 31st, your taxes are due by March 31st, although your tax return itself is not due until June 30th. But know this, if you haven't paid the taxes by March 31st, you only accumulate interest, not penalties. Kind of weird, I know. And the 7th and last thing I'm going to tell you about today, I actually mentioned before, your corporate tax return is due June 30th if your year end is December 31st. And if you don't file by June 30th, the filing penalty is 5% of taxes owed plus interest. And know this, if you're late 2 years in a row, the penalty more than doubles in the 2nd year. But in all seriousness, my friend, it all comes down to bookkeeping. I know a lot of firms are focused on growth and not their bookkeeping, especially in the early stages. But crisp and clean books and records and filing a little early is your best defense against CRA, which I will talk about in a lot more detail in my next video. And if these year-end tidbits are giving you a headache or indigestion, please do not navigate these treacherous waters alone. Please give me a call. Just schedule a consult with me today at themactax.com, and I'll help guide you through to the new year. Or better yet, just click on the link below to get started and deal with your year-end issues now so they don't become CRA's audit issues in a few months. Let's tackle it together, and thanks for watching. I'll see you in the next video.